distinguished guests on the dais and off the dais, ladies and gentlemen, it's a pleasure and honor to be in front of you. Basically, I come from stock markets, and usually when financial inclusion is taken or talked about, it's about banking. That somehow if the banks reach humans everywhere, it's going to create a very good framework for everyone to get included. For me, inclusion has several aspects of it. And one of the biggest changes that can happen in inclusion is basically technology. Many people, we have been trying for long to do financial inclusion, and we have not been able to be successful yet. This last year has been a phenomenal success, but before that, it was not that successful. And one of the reasons is technology. In telecom, till 2004, I remember we used to have many such meetings all the time, practically every day, about how to increase the telephone penetration. Those days, India used to have 4 mobiles per 100, 4 total phones, 4 landlines plus mobile put together for 100 people. And one technology of mobile with lower cost changed the game. Similarly here, what has changed the game is basically the technology that is mobile. Now, basically the correspondence and other frameworks are allowing banks to reach out. And 140 years, BSE has been in existence. BSE has tried to reach out to people. If we don't, in fact, I think Secretary Finance talked about the financial frauds, which happens in UK. But because the modern finance, the formal finance has not reached to nooks and corners of India, there is huge amount of fraud that is happening out of informal finance. We don't even count that. So when a farmer commits suicide in Maharashtra, it is largely because he has not taken loan from banks or from microfinance. He has taken loan from individuals who are after him. And that happened because each and every bank, if they had to go out to different cities, different villages, different towns, the cost was humongous of setting up branch network and controlling them. Today, because of the automation, it becomes easier. Similarly, for stock markets, today we are present in 2,000 locations across the country, hundreds of thousands of places you get BSE's terminals. And of course, through mobile and internet, you are able to connect from anywhere in the country. And that is where one portion of inclusion that is reaching out to people is happening, and it will happen more, much faster than what we have seen before. Already 12, 13 crore accounts have been created in the Prime Minister Jan Dhan Yojana. But for me, the other side is about how to reach out to them with the correct instruments. Again, no economy can work only on one leg of banking. It has to be banking, and banking is what we call intermediation framework, and then non-banking is basically the disintermediation framework. Today, the size of Indian economy, the banking system is worth around 80 lakh crore, $1.3 trillion. And the size of the stock market is around 108 lakh crores or 103 lakh crores. And if you add up the bonds market, it will be in the range of 100 billion more. So effectively, around 110 lakh crores. So if actually the stock market system is larger than the banking system by around 25%. And it has a potential to help India grow the way it wants to grow. If you have to grow at 7.5%, 8% over the next 7, 8 years, we need to have around $2.5, $3 trillion of funds raised for infrastructure, for manufacturing, Make in India, for Digital India, for services, for manufacturing, everything, and defense. Where will that $2.5, $3 trillion will come if our banking system total size is only $1.3 trillion? And the stock market is around $1.6 trillion. We will have to ourselves grow up. We'll have to also contribute. One is to ensure that we keep on trading a lot. Today morning when I came in, somebody asked me, saying how much trading is happening? And I said, trading in a stock market is only to give you indication of the asset prices. It is like saying in this area, in Cuff Parade area, what is the price of a per square foot area in premises, in flats and commercial areas. it doesn't have to trade every single second. It trades probably once a month, and still you get a reasonable idea of what is the price of a particular asset. Similarly, stock markets perform many functions. One of them is allowing you to trade. Second is to also give you signals as an economy that what are the asset prices of different stocks, different industries, and so on and so forth. So in that context, the second most important part of the stock markets is to channelize savings of the economy into productive capital in a disintermediated way. Intermediation happens through the banking channel. The disintermediation happens through the stock markets. And that is where the stock markets can play a huge role. Last around 5 years, we have been collecting average $15 billion, $10 to $15 billion for industry to grow themselves. And my understanding is if you require $2.5–3 trillion of funds over the next 7 years, if you are able to raise $150 billion a year, around $1 trillion can come from stock market itself. And that will allow India to create the jobs. India needs to create around 1.5 crore new jobs every year for next 20 years. India needs to create 30 crore new jobs, and that cannot come out of government jobs. It will have to come from private sector, and private sector requires funds. One set of funds will come from banking, other will come from the stock markets. And that is where, for me, the stock markets have a huge role to play. And as and when these youngsters who are coming into the job market, the old framework of joint family, which used to give them that feeling of comfort, that if something happens, the family used to take care. Now, in nuclear families, they will have to put in their money more into financial instruments. And that is where, again, stock market comes in through mutual funds, through insurance, whichever way, ultimately that money will come in through the markets. And that is where we think as and when a person becomes part of the financial system using bank accounts, he also will require some way to save his money and get returns for his money, which are part of the formal finance, more regulated environment, not the chit funds, not the Sharda type, but basically where you are regulating all these things. And that's where the Securities Exchange Board of India comes into picture, RBI comes into picture, IRDA, PFRDA, and so on and so forth. With that, thank you very much for calling.